Obviously, the age-old question, and really no agency, no benefits broker considers health insurance or any type of insurance to be a commodity anymore. That's a dangerous thought or dangerous way of looking at things. But with that being said, cost is always going to be a driver, incredibly important to businesses. And what we've seen, and it's no secret, is the cost of health insurance, renewal after renewal, year after year, is skyrocketing, and it's getting out of hand. And businesses are having to make some very difficult decisions because they're weighing that bottom line, that health insurance premium expenditure, with the value that they provide to their employees and their prospective employees, candidates, job candidates, when they submit offers and so forth, and trying to offer something that's value driven to their employees, but that doesn't break the bank. So that's kind of the age-old question. And so one of the trends I wanted to talk about was self-funding or partially self-funding. Traditionally, when people hear self-funding health insurance, that's traditionally been something for a large employer. They essentially are paying claims as they're incurred. But again, here in Massachusetts, thinking more about small to medium-sized businesses, let's just say, to put a benchmark, under 200 employees. Just to back up for 1 second, here in Massachusetts, we have the highest cost of health insurance in the country.
And great care.
Wow.
Well, that's what I was going to say. So it's a double standard. It's a blessing and a curse, because we have some of the best doctors and hospitals in the country, if not the world, right here in our backyard. But we also pay for it, when you bring your kids to the doctor, or when you get an x-ray or what have you. It all kind of is lumped in, to how those costs are derived. So anyway, small to medium-sized businesses trying to control their costs. Self-funding has always been available. It's always been an option, but it really hasn't been very popular in the past. And kind of the trend that we're seeing is more small to medium-sized businesses kind of at least expressing interest, if not taking it on. And in years past, it's kind of been something that's been shrugged off. But essentially how it works, and again, the self-funding model, that's also available to small and mid-sized business. But really, the partially self-funded, what's called in the industry, is partially self-funded, are companies where the self-funding component is essentially transparent. So it's individually medically underwritten. And that's not something that a lot of people even know exists. You can have your 40 employees, and they'll have to fill out a questionnaire, or maybe call in to an underwriter. And the group, in a fully insured model, is rated based on demographics and industry and a few other very generic things. But when you have a healthy group, if you know your group is healthy and relatively young, and they're going to underwrite well, this can be a great model, because you're sharing some of that risk with the insurance company. And if you have a good year health-wise, and your claims are low and your loss ratio is low, you actually can get a refund from the companies that have these types of plans. The nice thing about this is that it's all transparent to the employee. So just to compare the two models, fully insured is your Blue Cross plan, let's say. You pay your premium, and whatever the difference is between your premium and your claims, Blue Cross pockets. That's profit to them. And with this model, you have a good year, let's say, and you have a healthy employee group, and they don't have a lot of claims. You're paying into essentially a fund that's set aside, and at the end of the year, you take a look, and if there's a big difference, you get what can be a very substantial refund, a check in the mail. So it's a nice thing.